Welcome back, fellow value investors. In this video, I'm going to be covering a semiconductor company by the name of Taiwanese Semiconductor. And this is referred to as TSMC, symbol TSM. This is the world's largest foundry for semiconductors. And they've just been a really interesting company for the last 10, 15 years. I owned TSM about 4 years ago, did really well with them, sold my entire position, and I'm evaluating TSM to see if it's a good buy. I'll take this stock through my process. I'll value the stock using a free cash flow model as well as an earnings per share model to determine if there's a discount on the stock or if it's being sold at a premium. I'll share that analysis with you, and I'll also share my conclusion on whether I'm going to buy, hold, or sell TSM. Before I jump into the analysis, do me a favor and like my video and subscribe to my channel. And also, please leave a comment on TSM. Before I make a decision whether I buy, hold, or sell on TSM, I'm going to evaluate the company on 3 factors: the company, the balance sheet, and the discount on the stock price. First, I want to look at the company and see if I want to be part owner in this business, if I like the industry, if I like the management team. Second, I'm going to look at the balance sheet and make sure the debt is well under 3 times EBITDA. And last, I'm going to look at the discount that's available on the stock. And based on the answers to those questions, I'm going to buy, hold, or sell. TSM has been around for a long time, and they actually became the largest foundry because the demand for foundries was so high. Good for TSM that they invested the capital and have become one of the world's best companies to produce semiconductors. A lot of companies now are developing their own chips. So if you look at Apple, if you look at Microsoft, you look at Google, they're developing their own chips, they're designing them. And then they go to a company like TSM to manufacture and produce them. So it's a very good model in today's time. The one headwind with TSM is the geopolitical tension with China. It is significant. If there's ever any type of conflict or issue there, it could really drive the stock to go down, and it could threaten TSM's overall business. So that's one factor that led Warren Buffett to exit the stock. And that's one factor that we should always remind ourselves of. Historically, the company's really grown revenue well. Over the last 4 full years, the company's grown from $34.6 billion up to $75.9 billion in revenue. Impressive. But more recently, as we look at the quarterly revenue, if we look at the most recent closed quarter, which is Q3 of 2023, it's actually lower in revenue than the previous year for the same quarter. So that is a drop in revenue, a pretty good one. And I'll have to see when they're going to stabilize and begin to grow. Earnings per share has been really good. The company had just a boom year in 2022 and really impressive earnings per share. Earnings per share fell, but it's always been positive, which is good to see. And you're seeing an upward trajectory expected in 2024. So that's really good to see. I'm going to take the combination of the next 4 quarters, and I'm going to take that into my valuation as I value TSM based on earnings per share. Historically, the company has had a PE for trailing 12 months of 17.6. I'm going to use a 20, which is closer to the industry average. But again, the company is located in Taiwan. The geopolitical tension, I think I should use a conservative number. So I'm going to use 20 as a PE, as opposed to close to 24 being the industry average. I believe TSM is being sold at a premium of 40%. And what that means is that I actually believe each share is worth about $60 a share, but it's being sold at about $100 a share on the stock market. Big difference. And how did I get to my numbers? First, I looked at free cash flow. The current year, if I took the current year to date, it'd be a really low number. And if I annualize it, I'd get to a number of about 3 billion. But that doesn't fairly represent historically what the company's done and really realistically where the company should get back to fairly soon. So I think the best I can do is take a 5-year average and use that as a good starting point. So I used a 5-year average, which is 10.4 billion. That'll be my starting point on this valuation. I'm going to grow those free cash flows by 6% in years 1 through 4. Terminal value, I'm going to grow at 4%. And you can see that the company is going to produce a lot of free cash flows after year 4. All those cash flows, I'm going to discount at 9%. They have a good balance sheet, but they are an international stock for me. So I want to go with a higher discount rate. I'm going to add the cash on the balance sheet, but take away debt and get to an equity value of $223 billion. The market cap for the company is $520 billion. And that leaves us with, based on cash flows, stock. The stock is worth $43 a share, but it's being sold for $100. So based on the free cash flow discount method, the stock is sold at a premium of 57%. Let's look at earnings per share. The next 4 quarters of earnings per share should add up to $5.61 a share. I'm going to use a PE of 20 and grow those earnings by 4%. It leaves me with a stock price of $95.66, close to what it's being sold on the market at $100. So there's just a small premium of 5% on TSM using the earnings per share method. I combine the two, but free cash flow method, I use two-thirds that method in the weight of the blended amount, and 1/3 earnings per share method. So when I blend the two, I get to a 40% premium on TSM. The balance sheet, they have more cash than they do debt, so it's well below 3 times EBITDA, since they actually have a net debt of less than 0. Looking at where TSM stock has traded over the last 12 months, it has seen some volatility, but overall, I think semiconductor stocks have really done well this year, specifically because of the AI hype. And TSM is up 34.7% year to date. And I have a value of the stock of $60, but the stock is trading at about $100 a share. So there's a pretty good premium to get to work from what I value the company up to the current stock price on the stock market. They do pay a dividend of 1.8%. And there has been some opportunity, specifically at the very beginning of 2023, to buy the stock closer to where I think the company or the stock should be valued. So should I buy, hold, or sell TSM? Well, let's make that decision. So first, the business is excellent. I like the business. I like the industry. And I think this company is very well operated. The balance sheet's in great shape. They have more cash than debt, but there's no discount. I'm a value investor. I need to buy stock that is discounted. So that is a deal breaker for me. And I'm a seller of TSM. Thank you for watching the video. I hope you found it interesting. Do me a favor and like the video and subscribe to my channel. And please leave a comment. I'd love to read what you think of TSM. Thanks again for watching.